Hi, my name's Moses, and I'm the lazy frugal millennial. Today, I'm recording my 10th video, so in celebration of that, I'm going to be investing $10,000 on Robinhood. I'm actually going to be investing $15,000, but 10K on my 10th video sounds a lot catchier. I'm recording this on January 12th, 2021, and there's still a lot of uncertainty around the coronavirus, the vaccine, and the economy. And then on top of that, we're going to be getting a new president in 8 days, which will likely bring some new legislation, and we still don't know what effect that's going to have. Not to mention that the entire political scene's a mess right now. Despite all this uncertainty, I'm still going to invest because I believe in investing for the long term. Firstly, because you're more likely to make money in the long term, but second, because there's a significant tax savings for investing in the long term. In my tax bracket, if I hold an investment for less than 1 year and I sell it at a gain, I have to pay capital gains taxes of 24% on that gain. However, if I hold an investment for more than 1 year and I sell it at a gain, I only have to pay 15% taxes on that gain. That's a tax savings of 9%. In every tax bracket, there's a tax savings for holding onto your investments for more than 1 year. I keep my investments across multiple portfolios divided for specific reasons. My first portfolio is my M1 Finance portfolio, which is for investments of 10 or more years. I also keep my IRA with M1 Finance. For these long-term portfolios, I want a highly diversified portfolio with a lot of stocks across a lot of industries. When you're investing in the stock market, there's two main types of risk. There's market risk and specific risk. Market risk is risk that affects the entire stock market, thus the name market risk. It is pretty much impossible to eliminate this kind of risk because it affects the entire market. Specific risk is risk that only affects a specific industry, thus the name specific risk. Can you believe I paid for business school to learn this? Unlike market risk, you can essentially eliminate specific risk by having a highly diversified portfolio across a whole bunch of industries. In my long-term portfolio of 10 or more years, I have 98 holdings across 35 industries. In my IRA, I have a more reasonable 60 holdings across 20 industries. Since I don't have 2040 vision and I don't know which industries are going to be growing or failing over the next few decades, I hedge my bets by having crazy diversified long-term portfolios. These portfolios would be an absolute nightmare to maintain in a traditional brokerage just because there's so many holdings. But M1 Finance makes it easy because they let you make a weight-based portfolio of up to 100 holdings, and then they automatically keep everything in balance as you add more money to your portfolios. This makes it very easy to automate investing and park money for the long term without having to think about it. Link in the description to get $10 for free when you sign up for M1 Finance. I use Charles Schwab for my dream home fund. While I currently live in a house that I own, I don't plan on living here forever. This house just happened to be a great investment opportunity that also allowed me to reduce my living expenses. But in the next few years, I want to have this house rented and generating income. But once I'm ready to settle down in the future, I want to use the money in my Charles Schwab account to build my dream home. Finally, I use Robinhood for my shorter term portfolio of 1 to 3 years. Robinhood makes it very easy to invest because it's a very easy to use and intuitive platform. They also let you invest in specific stocks and buy fractional shares. Link in the description to get a free stock when you sign up for Robinhood. Besides my 6-month emergency fund, I don't like having a lot of cash on hand because savings interest rates are tiny compared to historical market gains. So anytime I have leftover money at the end of the month, I deposit that into Robinhood and use it to invest. The reason I need a shorter term portfolio is because I run 3 businesses and I'm always looking to expand them. I never know when the right investment opportunity is going to come by, but when it does, I know where I can get the money from. And on top of that, having a short-term portfolio allows me to react to current news and events, as well as take advantage of new and growing companies. But now let's talk about how I'm going to use my $15,000. Instead of buying a Toyota Camry, I'm going to be YOLOing all of this money on Tesla options. I'm going to be buying a Tesla $950 call option for June 18th. These cost about $15,000 each. Why? Because Tesla always goes up. I'm kidding. I'm not throwing away $15,000 on options. I'm going to spread this money across 4 stocks. I'm not specifically recommending these stocks, but these are just investments that I really like and I think are going to perform well over the next few years. The first stock I'm going to buy is Virgin Galactic Holdings. If SpaceX was a public company, I would be putting all of my money into SpaceX right now. Over the last few years, the space industry has seen explosive growth and has seen a lot of investment from big names like Jeff Bezos, Richard Branson, and Elon Musk. I expect that trend to continue over the next few years as space tourism becomes more accessible. I think within the next decade, it could get to the point where you could travel to low Earth orbit and experience 0G for the price of a family vacation. I will absolutely spend some money to travel to low Earth orbit and experience 0G once the prices come down. Maybe you can tell from my posters I really like space. Virgin Galactic had a pretty volatile first year on the stock market, but I don't really see that as a problem because most companies have volatile first years after their IPO. And on top of that, 2020 was a disaster. They've also had some recent issues during testing, but since my investment outlook is a few years, I believe they will continue to grow and do well as they finally get their space tourism plans off the ground. I'm going to put $2,000 into SPCE. On Robinhood, all you have to do to buy a stock is click Trade, Buy, type 2,000, Review, and swipe up. And now I own $2,000 worth of SPCE stock. The next stock that I'm going to buy is JETS. This is an airline fund that holds 40 airlines, including Delta, American Airlines, Qantas, and many more. As I'm sure we all know, 2020 was a really rough year for airlines, but they've managed to change and adapt to the current situation and have begun a comeback, which the price of JETS reflects. And I'm sure the $25 billion of taxpayer money that was given to airlines helped as well. I think JETS could perform very well over the next few years as the COVID vaccine gets distributed and as global travel slowly increases. So I'm going to be putting $3,000 into JETS. Trade, buy, 3,000, review, swipe. And now I own $3,000 worth of JETS stock. The next stock I'm going to buy is Brookfield Property. This is a real estate investment holding fund, and as such, they're required to pay out 90% of their profit as a dividend to their shareholders. Thanks to that, they have a very nice quarterly dividend. They hold a portfolio of malls, office buildings, hotels, and apartments, and several of these sectors have had a really rough year. But Brookfield has been able to maintain a rent collection rate of 90%, and thanks to that, they've been able to pay out a dividend through all of 2020, while many other real estate funds had to suspend their dividends. While most stocks are backed by the perceived value of a company, as a real estate fund, BPYU is backed by $36 billion worth of assets, $13.8 billion of which are equity. Like the rest of the stock market, Brookfield Property had a really rough start to 2020, losing almost 60% of their value. But they still owned $36 billion worth of assets. After having a recovery through 2020, their share price is still sitting lower than it was a year ago. So to me, it's just on sale at a discount. I'm going to be putting $5,000 into Brookfield Property. So again, trade, buy, 5,000, review, swipe. And now I own $5,000 worth of Brookfield Property. The last stock I'm going to buy is Tesla. And I'll be honest, over the last few years, I didn't have enough faith in Papa Elon. Pre-split, I was looking at the share price go from $200 to $300, and everything inside of me was telling me that it was just overvalued and not to touch it. And then it continued to climb, and climb, and climb, and then it hit $1,500 before I finally decided to put money in Tesla. And now I'm sitting on over 500% profit on my investment. Beyond their meteoric rise, I do really like Tesla as a company. Their mission statement is to accelerate the world's transition to renewable energy, which I wholeheartedly support. I love everything that they're doing with transportation, battery tech, and solar tech. And after seeing that the 5-year maintenance cost on a Tesla is less than the 1-year maintenance cost on my gas car, Tesla's at the top of my list for my next car. And on top of that, I'll be saving an additional $500 a year on gas. I've also finally realized that Elon Musk is always working on revolutionary technologies in the background. It's rumored that Tesla is currently working on electric boats and electric planes. Electric airplanes are nearly impossible right now because of the size and weight of batteries. But that makes Elon Musk the perfect person to take on this problem because he doesn't believe anything is impossible. That's how he's been able to develop so many amazing technologies. Every time Elon announces something new, even if that's under SpaceX or under the Boring Company, the Tesla share price goes crazy. So right now, investing in Tesla is as close as you can get to investing in Elon. I think it's very possible that Tesla is in a hype-driven bubble, and it wouldn't really surprise me much if it dropped 30%. But I also doubt that it will ever lose all of its value. Since I only plan on holding this investment in the short term, and in the last year they've grown 700%, and in the last 5 years they've grown over 1,700%, I'm willing to take that risk for the next few years. I'm going to be putting $5,000 into Tesla. So trade, buy, 5,000, review, swipe. And now I own $5,000 worth of Tesla. Thank you for watching my video. If you enjoyed it, then please like and subscribe to my channel. Leave me your hate down in the comments. It still helps with the YouTube algorithm. Don't forget to drink your water, and I'll see you on the next video.